Welcome to Trading Club Q7U. Today we're going to break down the basics of order types in trading, making it easy to understand and apply in your trading journey. Without these orders, trading would be chaotic, and this lesson will remove any confusion you've had so far. Let's start from scratch and discuss the four main types of orders: market orders, limit orders, stop orders, and stop limit orders. We'll start with the basics. A market order is the simplest type of trade. When you place a market order, you're essentially saying, I want to buy or sell this asset at the current market price. It's like walking into a store and saying, I want to buy this item, how much will it cost? The clerk tells you the price, and you either agree to pay it or walk away. Here's an example to make it clearer. Imagine you're buying a stock with a market price of 50. If you place a market order to buy 100 shares, you'll buy those shares at 50 per share. As soon as the order is filled, you'll own 100 shares of that stock. This is a straightforward trade where you accept the current market price. However, as a beginner, you might make a common mistake by not understanding the implications of market orders in volatile markets. When the price is moving rapidly, a market order can trigger an order at an unfavorable price. For example, if you place a market order to buy a stock at 50, but in a matter of seconds, the price reaches 55, you'll end up buying the stock at 55, which might not be your best decision. A limit order is a bit more complex. With a limit order, you specify the price at which you want to buy or sell an asset. Think of it like bidding on an item on an online marketplace. You set a maximum price you're willing to pay for the item, and if someone sells it to you at that price, the deal is done. Here's an example to illustrate how it works. Let's say you want to buy 100 shares of a stock that's currently trading at 40. You think it will go up to 45 and want to buy it at that price. You place a limit order to buy 100 shares at 45. If the stock price reaches 45, your order will be filled, and you'll buy 100 shares. This way, you're able to buy the stock at your target price. However, it's essential to understand that with a limit order, the order might not be executed at all if the target price isn't reached. If you place a limit order to buy 100 shares at 45, and the stock price never reaches that level, the order will remain unfilled. A stop order is a type of order that's designed to protect your profits or limit your losses. Let's say you've bought a stock at 20, and you set a stop loss order to sell if the price falls to 18. When the stock price reaches 18, your stop loss order will be triggered, and you'll sell your shares to limit your losses. For example, if you bought a stock at 20 and set a stop loss order to sell at 18, you'll limit your losses to 2 if the price drops below 18. However, beginners often underestimate the importance of setting stop loss orders, which can lead to significant losses in extreme market movements. To avoid this, make sure to set realistic stop loss levels and monitor your positions. A stop limit order is a combination of a stop order and a limit order. Imagine you've placed a stop loss at 18, but you only want to sell if the price reaches 19. You can set a stop limit order to sell if the price drops to 18, but only if it's at or above 19. This way, you're protecting your profits and limiting your losses while also giving you the flexibility to choose a higher sell price. Now, let's talk about common mistakes beginners make. To apply what you've learned, we have a practical exercise for you. Homework exercise. Let's say you want to buy 200 shares of a stock trading at 30. You think the price will go up to 35, but you're concerned about the market volatility. What type of order should you place to enter the trade? Now, imagine you've bought 200 shares of the same stock at 30, and you're now concerned that the stock price might drop below 25. What type of order should you place to limit your losses? For the first question, The correct answer is a limit order, since you want to buy the stock at the target price of 35. For the second question, the correct answer